Hi, I'm Dominic Picarda here for the Trader column of investorschronicle.co.uk. It's Friday, the 30th of March, and today I'm going to take a look at the prospects for the S&P 500 index, which as of now remains in a very, very strong uptrend and has been that way ever since sort of mid to late December time. And it just doesn't want to seem to roll over. Every time that we get some sort of pullback like here or here, the market quickly comes bouncing back, confounding the hopes of the bears that we're going to get a more decent correction, 5 or 10% perhaps. So today I want to consider how long this situation can continue. And this is quite a difficult job because at the moment, a lot of the technical tools that we would normally rely on in order to give us a hint about where a turning point is likely to happen have broken down, basically. I mean, you can see that the market, the S&P, for much of 2012 so far, has been firmly here in overbought territory on its daily chart. A couple of times, not only has it been overbought, but but momentum hasn't been confirming the new price highs. Usually, that is an indication that that a reversal might be in store. This time round, it really hasn't helped that much, and this is a key tool that I normally rely upon. That the same is true now. Recently, the market got overbought and then went to new highs, which was not confirmed by momentum. But no matter, the market came off a very, very small amount this week and continues on upwards. So this is one hell of a strong market, is what we're saying here, such that a lot of our traditional tools break down. And this is true of another one of the key signals that I use, or at least one of the key methods, which is cycles. I like to try and spot turning points with reference to cycles in the market. This red line you can see here is the 38.5-day cycle. It is one of the most significant cycles on Wall Street, at least for the shorter term time frames. And you can see that over just the last few months, it helped to pick a sort of a major low here, significant high here, low here, turning point, a low here. A couple of times, of course, it hasn't worked. There was really no hint of there was no proper low in this time frame, or indeed a high. Here, when one might have expected there to be a high, there was in fact nothing of the sort. The market just went sideways for a bit and continued on up. We did get a low here, and now in the 6th of April time frame, this cycle is pointing to yet another turn. If the market rallies into that date, then what we would normally expect is for a high to occur. But frankly, at the moment, I'm not holding my breath. I'll be on guard for something around then, but nothing is going to deter me at the moment from continuing to trade the S&P on the long side. I'm long at the moment. I think if we are going to, the next significant turn in the market is actually more likely towards the late April, early May period, where you'll remember that the last couple of years we've had a major high, and I'm not expecting the major high, by the way. But I am expecting that is a more likely date for a turning point. There's another significant cycle which turns in at around that date, and of course the seasonal factors turn more against stocks as we head into May and then into the summer period. But for the moment, my strategy is to continue buying on the dips intraday. So long as we remain comfortably all above the daily and intraday averages, that's how it's going to remain.